Ashwini Agarwal is our market master of the day, founder and a partner at Demeter Advisors. Ashwini, good morning. Good to have you with us here. Thank you for your time. I mean, I think, are we at that point where we've already paid for our sins in that sense, the exuberance, excesses, etc., and now it's the turn of the US. So it's not necessary to look at US drawdowns and say, well, maybe it keeps a lid for a while, but we've already been through the damage. What's your sense, Ashwini? Near-term and a medium-term picture.
Yeah. Morning, Prashant, and thanks for having me here. What you say is absolutely right. I think bulk of the damage is done. You will continue to see episodic news flow, which is concerning because the policy environment in the US continues to be extremely fluid. And you'll probably see concerns surrounding the US dollar, which, if it weakens considerably following the policy actions that are ongoing in the US, might create a bit of a cloud for exporters in India. But on a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. Having said this, if you go back to corrections over the last 20 years, they typically tend to be 12 to 18 months long, with bulk of the damage done in the first 6 months. And this might be a repeat of a similar pattern in the sense that the market peaked in September of 24. We are already 6 months into it. Broad indices are down about 16-17%. A lot of damage in the mid and small cap space. And serious value emerging. So from a short-term perspective, it's very difficult to say. I think, a small rebound is quite likely in the very short term, given the extensive fall that we've had in recent weeks. But I think a bigger or a more durable bottom is still difficult to say because the policy environment continues to be extremely fluid. And please remember that, if the world is slowing down, India will slow down as well. So taking those two things into account, I'm not sure if the durable bottom is another 5% lower or is already behind us. It's very difficult to say. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. That's how I think about it.
We were talking about IKS, and we'll have an alert out there for you. Just coming back to you, Ashwini, there's a lock-in which is ending, as Hormuz has pointed out earlier. So I think this is...
It's a 3-month lock-in. 4.2 million shares open up for trade in the market now.
There you have it.
And this is about 2% of the total outstanding shares. Since IPO, the stock's not done too bad. So I guess it's just people rushing to book some profits. 9% down. So all the locked-in investors perhaps want to cash out today. That could explain it.
A 10% cut now. And I think there's a very large pipeline of stock. Maybe we'll put that data out. I remember seeing in November, humongous. Big lock-ins because we saw such a big IPO boom all the way till December last year. A lot of these 3-month lock-ins, 6-month lock-ins, then of course, a lot of that. It's not that
there's
all
also
of it...
Vishal Mega Mart. That's actually, I have the list in front of me. Maybe quickly just pull up the stocks. Vishal Mega Mart, the 3-month lock-in is ending today. The Sai Life Sciences, there's One MobiKwik. IGI anyway has been absolutely slammed hard. So these are some of the counters where either a 3-month lock-in or different periodic 1-month lock-ins could be ending today. 1-month lock-in today is ending for Ajax Engineering as well.
I'd be most interested in seeing what happens with EMS Limited, because the entire EMS space has been very much in focus. From the issue price, the stock has moved about 200% as well. But from the post-listing high, it's nearly halved. And we have 18-month lock-in ending on EMS listing, which has outstanding equity of about 20%, 1.1 crore shares. So that's MobiKwik, which is lower. Just EMS Limited is the one we'll keep an eye out on. Currently holding in the green, but remember 20% of its equity comes out of lock-in today. The stock's already corrected about 40% from its high. And from the IPO price, it's up about 200%.
Okay. So anyway, since Ashwini, we're on this subject of paying for our past sins, as Prashant very nicely put it. What about these issues? This is another risk that you're now running, right? Where, as we're seeing, this is today's theme, wherever lock-ins are ending, people are using the opportunity to quickly get out. What would the advice be in general on some of the recent issues? How did you find the quality of paper that came in? And should one be worried Does this become another trigger to basically get out of any of the recent listings?
Survi, I think it's not a standard answer because some of the IPOs that came in were very expensive and then they traded up. So valuations became ludicrous. So even if at a 50% decline, I mean some of the stocks that I've looked at recently to try and find out if there's any value are still trading at 50, 60, 70 times price to earnings multiple, and those are not palatable to me. So I would say that, yes, the opening up of lock-in, if it creates a fall in the stock price and valuations are reasonable, by all means, go for it. Because, my sense is that there is a lot of panic, I wouldn't say panic, but I think a lot of uncertainty that's driving investors to take very short-term calls, and that is an opportunity for medium-term investing. But I would say that the starting point of valuation has to be reasonable. If the valuations are still in the vicinity of 40, 50, 60 or thereabouts, I would stay away. We can find plenty of things which are now in the 10 to 20 PE range, and I think that's where the value picking should be attempted. So it's not so much as selling should be something to worry about. It should be seen as an opportunity if the valuations are right. That's how I think about it. The quality of the paper you asked, some of the quality of the companies is very good, beyond doubt. But there is a valuation that one has to contend with.
And of course, I mean, if you're trading, then this kind of data point becomes very important, right? I mean, you don't want to buy something and the next day, if you're trading specifically.
Yeah.
So this is, I mean, you've got so much to track. The global stuff, local stuff, this is lock-in business now. But of course, that's the nature of things. I guess I think it's coming up a little bit from the lows. And it's a solid business. I mean, I remember speaking with them here on the day of the listing. But of course, it's all about what you pay at the end of the day. Mangalam, what else?
What else? Just ask Ashwini a little about the consumption space once again. I mean, he didn't seem like he's very interested in anything above 10 to 20 PE because that's where value pickings are. But look at Godrej Consumer. That stock opened in the red, and from there, swiftly it's moved higher. It's moved to the high point of trade. And in consumption itself, we look at rural consumption. One of the key proxies is looking at two-wheelers too. So you have TVS Motors too, which too has recovered from the lows. We are seeing some traction in M&M as well. So that's moved to the high point of trade. We have a few stocks which are recovering from lows. Britannia opened about 3% lower, now just about breaking into the green. Hindustan Lever just about flat, but again, recovering from lows is what we've seen. Ashwini, any proxies that you have in the consumption play, specifically because rural is doing better and urban's expected to do better? Is this an investable theme right now?
Yes, it is. I mean, I think, in the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. I think even in the large cap space, the consumption companies which are domestic market oriented will probably give you decent returns of mid-teens or so on the next 2 to 3 year basis. Like you said, I think the outlook for the rural demand is a little bit positive and urban demand is expected to come back as well. And I also think that the exporters will continue to get buffeted by the outlook on the rupee dollar and the outlook on tariffs and the uncertainties arising from there. So, that will cause a shift towards the domestic economy. But the one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued. I think many of them are evoking the kind of carnage that we saw in 2018, 2019. I don't know if things are as dire this time around because the starting point of capitalization is much higher. And RBI has been extremely vigilant ever since the Yes Bank, Diwan Housing, ILFS debacle over 2018, 2019. So I would be very surprised if there are a lot more skeletons to tumble out. So I think that's one space which offers a lot of value to me. I think those are the two spaces, consumers and financials that look very interesting to me.
Very quickly, Ashwini, you briefly mentioned exporters, and I know that you have a view on sort of apparel makers, textile apparel makers, right?
Yes.
Again, space is not done very well. Are we waiting for these tariffs or anything? I mean, what's plaguing the space?
I think, again, they have done extremely well over the last 2 years in terms of select stocks, and valuations in some cases might be a little bit stretched. Second is that there is an uncertainty arising from the outlook to the currency, as well as what happens to the US demand in response to all the policy action going on there. So, those are the two worries. But I also think that this is a huge opportunity for India. I think apparel making is a strength for India in many ways, and I hope that the ongoing conversations that are going on with the government of India and the US in terms of putting in place some tariff agreements or preferred partner status, some of that comes through, which will put aside the uncertainty these stocks are facing right now. So I think I'd wait to see the outcome of that. But I think longer term, the opportunity is there. And I don't think this is an industry that can go back to the US in terms of manufacturing. It's just too manpower intensive for it to make sense to do it on mainland US.
Okay. All right. Ashwini, thank you very much. Great to get that perspective from you today. Pleasure having you on the show. You have a good day, and we look forward to the next call soon.